Ladies and gentlemen, good day and welcome to Patel Engineering Limited Q2 FY24 conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gopal Chandak from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to Patel Engineering Limited Q2 FY24 con call. From the management side, we have Ms. Kavita Shirvaikar, Full-Time Director and CFO, Mr. Rahul Agrawal, Head Strategic Finance, Mr. Aditya Bajaj, Investor Relations. Now I hand over call to Ms. Kavita Shirvaikar. Over to you, ma'am.
Very good evening to everyone, and thank you for taking time to join this investor call for our company. The presentation summarizing the performance of Q2 FY24 and the press release along with the results have been uploaded on the stock exchange, and I hope you all have had a chance to look at the numbers. Before we get into the detailed results, let me tell you that despite a few projects being affected by a very heavy monsoon season, this quarter has been reasonably good for the company, and we have continued the growth momentum on a year-on-year basis. To start with, I shall be giving you all a short brief of key highlights of the performance of the company in this quarter, and then we'll be happy to answer any questions which you all may have. Before we deep dive into the financial performance, let me run you through the current order book and the operational highlights of the company for the quarter. The current order book of the company stands at 20,000 crores. In this quarter, we have received the letter of award for the Dibang multipurpose project of 2880 megawatt, which is located in Arunachal Pradesh and client is NHPC. This is currently India's largest ever hydropower project announced by the Indian government. We were earlier declared lowest bidder for this project. Total value is 3637 crores and our share is 1818 crores. This project is under mobilization stage and shall start generating revenue from the next financial year. Further, in this quarter, we have also received the order for an urban infrastructure project received from Madhya Pradesh Jal Nigam. The project is located in Ujjain and Indore. This project is being executed in JV and our share in this project is around 446 crores. In this quarter, we have also been declared as L1 for two schemes in an irrigation project by Maharashtra Krishna Valley Development Corporation. This is a pipe distribution network project and total value of these two schemes is around 452 crores and our share is around 180 crores. We expect that Q3 and Q4 FY24 will be better in terms of order inflow, but due to election year, there may be some shift for a few large order inflows to FY25. Now coming to the composition and breakup of the order book. 60% of our order book comprises of hydropower projects, 21% irrigation projects, 12% tunneling and 3% of our order book is road and rest 4% from others. Also, 62% of our order book is from central government, PSU, which are AA, AAA rated entities, and 35% from state government and balance 3% from Nepal. Speaking about the hydropower sector, which comprises the major pie of our order book, as per recent notification by the ministry, at present, around 42 hydropower projects with an aggregate capacity of 18,034 megawatts are under construction, and 30 hydro projects with an aggregate capacity of 21,810 megawatts have received concurrence from the CEA, which can be taken up for construction and should come up for bidding shortly. I am happy to inform you that out of the current 18,034 megawatts which is under construction, Patel Engineering is involved in construction of around 8,200 megawatt of projects, which is 45% of the entire hydropower project being executed at present. This is testament to the dominating presence that we have in this industry. Recently, in August, the Government of India and the Government of Arunachal Pradesh have come together to execute 12 hydropower projects in the state with a cumulative installed capacity of about 11,517 megawatts. The projects have been allocated to PSUs, namely NIPCO, SJVN and NHPC. Hence, these projects should also come up for bidding and construction in near future. The government has also increased its focus on hydro pump storage projects as these are this necessity to achieve Government of India's commitment of 500 gigawatt installed capacity from non-fossil fuel sources by the year 2030 and net zero carbon emission by the year 2070. PSPs will help integrate intermittent renewable energy with the grid. The government has taken various steps recently in order to ensure that pump storage get commissioned on a fast track, thereby accelerating the growth of India's renewable energy capacity. As per recent ministry update, there are 39 hydro PSPs of 47 gigawatts being pursued to be commissioned by the year 2030. So we see tremendous potential in the coming few years in this sector where the company is a dominating presence. Now coming to the irrigation sector, where the company has increased its presence in the last few years and which comprises around 21% of our order book. India is one of the major players in the agriculture sector worldwide, and it is the primary source of livelihood for 55% of India's population. To enhance the income of farmers, the government has taken initiatives across several focus areas. Income support is provided to farmers through PM Kisan scheme. Crop insurance is assured through the Pradhan Mantri Fasal Bima Yojana, and irrigation facilities are ensured under Pradhan Mantri Krishi Sinchai Yojana. Pradhan Mantri Krishi Sinchai Yojana is an umbrella scheme consisting of two major components being implemented by Ministry of Jal Shakti, namely Accelerated Irrigation Benefit Program and Har Khet Ko Pani. Under initiatives like Pradhan Mantri Krishi Sinchai Yojana for 2021 to 26, there has been an outlay allocation of around 93,000 crores, which would benefit about 22 lakh farmers. Since August 2019, Government of India is implementing Jal Jeevan Mission in partnership with states to make provision of tap water supply to every rural household by 2024. As of August and this year, out of 19.41 crore rural households in this country, around 12.75 crore households are reported to have tap water supply in their homes. As per a recent announcement by government, they are extending financial support to states for capital investment with allocation of around rupees 1.3 lakh crore for 2023-24 for JJM projects. With the focus of the government on providing every household in India with drinking water and proper irrigation facilities, there is again huge potential to be explored in this segment. Another important sector where the company has a presence is the tunneling sector, which comprises about 12% of our order book. Tunnel construction has become an integral part of infrastructure development in India. It has seen significant growth in the past few years, owing to development across key infrastructure sectors, including urban rail, roads and highways, hydropower, irrigation and water. Similarly, increasing development in the metro rail sector has spurred tunneling activity. The roads and highways tunnels are also witnessing a rise, especially in the hilly regions. According to projects tracked by India Infrastructure Research, India has more than 2,500 kilometers of compelled tunnel length, out of which hydropower sector has the highest share of completed tunnels of over 1,200 kilometers, followed by irrigation, then railways, metro tunnels, water and sewage, and roads. With regard to upcoming tunnels, the tunneling sector offers a strong pipeline of around 1,300 tunnels, spanning a length of more than 3,600 kilometers. Maharashtra has the maximum share with over 1,100 kilometers, followed by J&K with over 460 kilometers, and Uttarakhand with more than 280 kilometers. Going forward, the overall outlook for tunnel development in the country remains promising. Many new projects are in the pipeline. The schemes and programs of the government, such as Gati Shakti Master Plan, are expected to boost the infrastructure capabilities in the country. On the operational front, in August this year, for our RVNL project, final inspection was successfully completed and the section has been approved for operation of trains. This rail line passes through dense forest and entire stretch is under core Naxalite belt of Bastar division, where the work was going on restricted hours, not more than 6-7 hours per day under security cover provided by the government. Also, Q2 FY24 started off with very heavy rainfall, especially in North India and Himachal Pradesh, especially saw very heavy rainfall, which was the highest in 70 years. The company took all necessary safety, precautionary and mitigation measures as practicably possible and also got full cooperation from client at site to recommence work post such temporary interruption. I'll now cover the financial performance parameters. Q2 FY24 was a quarter of healthy performance for the company. On a consolidated basis, revenue from operations for Q2 FY24 is 1021.3 crore, which is up by 23% from rupees 830.34 crore in the corresponding quarter in the previous year. This is on account of strong order book growth and well execution of projects. Operating EBITDA for the quarter has increased to rupees 140.07 crore as compared to rupees 118.6 crore in the previous year. Net profit is up by 63.4% at rupees 32.2 crore for the quarter as compared to rupees 19.7 crore in the previous year. On a consolidated basis, half-year revenue stands at rupees 2139.9 crore, which is up by 23.6% from rupees 1731.4 crore in the previous corresponding period, and net profit at rupees 70.49 crore, which is up by 38% year-on-year from rupees 50.96 crore. On a standalone basis, revenue from operations for Q2 FY24 is at rupees 1012.11 crore, which is up by 24.2% from rupees 814.46 crore in Q2 FY23. Operating EBITDA is up 22.2% at rupees 135.58 crore as against 110.94 crore in the previous year. Net profit is up by 168% at rupees 41 crore as compared to 15.35 crore in the previous year. Half-year revenue on a standalone basis stands at 2102.8 crore, which is up by 24% from rupees 1695.5 crore in the previous corresponding period, and net profit at rupees 172.02 crore, which is up by 241% year-on-year from rupees 50.37 crore in the previous corresponding half year. The sector-wise revenue breakup on a standalone basis for Q2 FY24 is from hydro it is 49%, irrigation 31%, tunnel 15%, road 3% and others 2%. Now moving on to the debt position, the consolidated gross debt as on 30th September 2023 is rupees 1992 crore. The same is increased from March due to replacement of high cost advance of rupees 252 crore in Q1 FY24. Further, there is a cash and bank balance as on 30th September 2023 is rupees 257 crore. The consolidated debt to equity ratio has remained the same as the previous quarter at 0.67 as on 30th September 2023. The breakup of the debt, working capital debt is rupees 1155.4 crore and balance is term debt which is around 836 crore, which is expected to be repaid over next 3 to 4 years, also from monetization of non-core assets and on surplus from operations. The finance cost for Q2 FY24 on consolidated basis is rupees 91.6 crore, which has reduced as compared to Q2 FY23 103 crore. The broad breakup of finance cost: interest to lenders for Q2 FY24 is 54.8 crore. Interest on advances from client is around 20 crore. Total advances from client as on September 30th is 890 crore versus 1307 crore in Q2 FY23. Balance amount of 16 crore represents BGLC and other borrowing costs. Other updates like gross block of plant and machinery as on 30th September is around 1100 crore. Total employee base is around 4,500 employees. On a consolidated basis, our diluted EPS from continuing operation has improved from 0.41 as on 30th September 2022 to 0.46 as on 30th September 2023. And debt divided by EBITDA has improved from 4.31 to 3.21 year on year. Speaking about the arbitration claims, under the Vivad Se Vishwas scheme, which was launched for the settlement of pending disputes related to government contracts, the company has filed for various settlement amounts for projects which were under ongoing arbitration. We expect to realize some of these arbitration awards through this scheme and which will facilitate to release few bank guarantees which was given earlier for realization of this amount. With this scheme, we expect some claims to be realized in shorter period of time than earlier anticipated. Receipts from this scheme will help us lighten the balance sheet and also augment working capital requirement for upcoming fresh orders. We continue to stay positive on the outlook of the sector and enhance government spending, thus expecting steady growth in our revenue. We expect revenue growth of around 15 to 20% year-on-year basis. That was small brief from our side. Now our team here shall be happy to answer any further questions which you all may have. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Muralidhar, an individual investor. Please go ahead, sir.
Hello, namaste, madam.
Yes, sir.
Sir, yeah, namaste, good evening. Sir, may I know what will be the projected order book for the financial year, sir? Like, what are the expectations?
Projected, what you're saying, sir, projected order book?
Yeah, sir, expectations like what you're expecting the order book to be in this financial year, sir. It is already 20,000 crores, sir. And what you are expecting in the coming 2 quarters, sir?
Sir, we expect that the order book will be maintained or, around 8 to 10% growth scenario. And some new orders may come, but due to election period, some orders may shift in the next year.
Yeah, okay, so may I know the reason for the drop in the margins, sir?
So normally a margin is in the range of 13 to 15%. This quarter specifically being in the monsoon period, so the costs are a little higher in that period.
But EBITDA is 13.5%.
Yeah, 13.5%.
Sir, are you done with your question?
Yes, sir, I'm done, madam. I'm done. Thank you.
Thank you, sir. We take the next question from the line of Mr. Prashant from Univate Corporate Research. Please go ahead, sir.
Hello.
Yeah, Mr. Prashant.
Yeah, am I audible? Yeah, thanks. Good evening, ma'am. I just wanted to ask you on Subansiri hydroelectric project. Now, the company is executing the powerhouse and HRT. So how far is the progress and has it been completed for 2 units at least?
It is almost, we are on track. We have completed. But because of now, there is some issue because of heavy rainfall and everything. Dam portion is, some issue is facing. So we expect by March at least 1 unit will be commissioned.
Yeah, but from your side, the work has been completed or is it?
Yeah, from our side, our portion of work is completed.
Okay. For 2 units or 1 unit only? Just to clarify.
From our side, whatever work, we are on schedule, we are on track. But because of rainfall, we have to do the rework, certain things. Like we have to again construct the dike and other things. So that is in progress.
Okay. But these are for only 2 units because there are some 8 units in the project. So how far we are?
As per schedule, by March, plan was to commission 2 units first and then the rest of the units balance period.
Okay. Okay. And secondly, your project on Dibang, what is the expectation that when the final ground, on the ground, when will the project start, you expect?
Here, Dibang is a large hydropower project. Now it is in initial mobilization stage. So we expect revenue starts coming in from the next financial year.
Okay, so you expect the work to start in the next financial year?
Yes, sir. Yes, sir.
Yeah. And thank you, ma'am. That's it from my side. Thanks, sir.
Thank you.
Thank you, sir. The next question is from the line of Chirag Shah from White Pine Investment. Please go ahead, sir.
Hi. Thanks for the opportunity. Hi, Kavita. So quickly, 2-3 questions. One, on this Vivad Se Vishwas scheme, would you like to indicate what kind of realizations you are expecting? Because you mentioned you expect resolution to be fast, earlier or sooner than your initial expectation. Would you like to indicate or what kind of claims you have submitted or in that scheme?
See, we have discussed with clients. Now, see, there are a lot of things where the clients will also have to come back because there are some places where advances were there, so they have to set off everything. They have to return our bank guarantees. So, on each individual basis, whichever will suit us, benefit us, because we have to give discount also in this. Whichever will suit us, that only we'll accept. So, right now, putting a number is difficult. Maybe by next quarter, we can, give some update.
So around 150.
Yeah.
So around approximately 150-200 crores we expect realized under this scheme.
Okay. And so this is in the near term, right? But overall, have you submitted more or is it the initial submission we are talking about for which you expect 150-200 crores?
No, whatever we have submitted out of this, we are not going everything under Vivad Se Vishwas. Part of which are eligible and we are submitting. Out of that, we expect to realize around 150-200 crores.
Okay. And by end of the financial year, you can expect or it can get spilled over post the election actually?
No, we expect by end of this financial year.
End of the financial year. Okay.
Yes.
Second question was, if I observe that your order book seems to be stagnating as your execution is increasing, so how should one look at it? Do you expect major accretion to order book only after elections or there is scope of some approvals happening in between?
We expect in between also to get some orders, but yeah, there is an uncertainty because of election. So some large orders might get shipped to Q1 of FY25 next year.
Why I was asking this because last year we had around 22,000 crores of order. Right now we have around 20,000 crores of order, and it's understandable. So that's why I was questioning. So, but would it be fair to assume that the drawdown will not be? You would be able to maintain this order book at least if because there will be something or other coming up, right?
Yeah.
Right,
something or other will come.
right. Something or the other.
And major accretion.
Yeah.
And major accretion. So if I have to just give us a 20% increase in order book, we can expect post election.
Yeah, correct.
That kind of thing is a fair way to look at. So 25,000 crore of order book by end of next financial year is not a big number, is a big challenge. That kind of submissions you have made.
Right. Yes, sir.
Yeah. And last question, if I can ask, is just on this margins. So, is there any risk of escalation clauses coming into and given the way the commodities of late have been behaving, is there a risk that there could be a risk of escalation that margins can remain subdued for 1 or 2 quarters?
We have a pass-through clause for escalation in all contracts. So where more than 90%, 95% of the escalation is passed on to the client. So we don't see a challenge that.
Okay, great. So 13.5%, 14% margin is not under a big worry kind of thing. Great.
Right.
I'll come back for more questions. Thanks for this.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1. We take the next question from the line of Arushi Shah from Sushil Finance. Please go ahead.
Hello, am I audible?
Yeah.
Yeah, hi. So, thank you for the opportunity. I have two questions. First is, the debt, I heard that we have been increased, the debt has increased over last quarter from March. And what the cost are we refinancing it? Can I get a color on that, please?
So see, basically the debt on an overall basis, the serviceable portion is not increased. The lender's debt has increased, but corresponding client advances have reduced because there was around 250 odd crores of client advances, which was at a higher cost. So we got it replaced from debt in Q1.
Okay. So the financing cost per se hasn't increased.
Yeah, so both put together, I would say in March, advances was plus debt was around 3,050, which is combined today around 2,900. So all combined, we have reduced by 150 crores.
Okay, got it. Thank you. And also, secondly, could you comment on your bottom line? I see a little bit of dip in the margins. So is it like temporary because of the H1, and can we see improvement in the H2 or something like that? The bottom line.
We have been maintaining EBITDA margins around between 13 to 15, depending upon what sort of work we are executing in that quarter. So that will maintain, and we don't see interest costs increasing. So, bottom line should not be a challenge.
Okay. And for a long term, if I see a visibility, like what is your plans, like say from 5 years, and what are the things that are on your mind, or some certain strategies which you would be looking at overall from a very broad perspective?
See, now, as we discussed, there is a huge opportunity available in the sector where we operate in. So from next year post-election, we expect huge inflow, order book inflow, and we expect to maintain the 15 to 20% revenue growth and as well as order book growth.
Okay. And any other geographies that we'll be exploring?
Right now, there is enough work in India, so right now there is no plan.
Okay. Thank you, sir. Thank you, and best of luck.
Thank you.
Thank you. We take the next question from the line of Jainam Shah, an individual investor. Please go ahead, sir. Mr. Jainam, your line is in the talk mode, sir. Please go ahead with your question. Hello, Mr. Jainam, can you hear us? Hello, Mr. Jainam, can you hear us, sir? As there is no response from the line of the current questioner, we move on to the next question. Before we take the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question is from the line of Ananya from T Square. Please go ahead.
Hello. So my first question is, how do you ensure cost effectiveness and efficiency in projects to maintain a competitive edge?
See, we have our monitoring teams who monitor the costs, and we have tight team, budgets and all, where we monitor everything. And based on our past experience, we have all ballpark numbers where, what cost should be incurred for what sort of work. And that's why we are confident that we are expected to maintain a EBITDA margin of 13 to 15%.
Okay. All right. And are there any plans for fundraising or debt reconstructing in near future?
Nothing in the near future.
All right. Okay. So is there any strategy for maintaining and expanding your customer base?
See, right now the projects what we are doing, similar clients are there. So unless we foray into different segments, we don't see customer base changing.
Okay. So last question from my side. Can you provide more insights into the order book, including distribution of orders among different segments and expected execution timelines?
We have book-to-bill ratios around 4 to 5 years, and 60% of our order book comes from the hydro segment, around 21% from the irrigation segment, 12-13% comes from the tunneling segment, and rest is urban infrastructure, roads, others.
Okay. So, sir, do you have any delays in your current projects and completion period?
No, all our projects are running on schedule. Monsoon, obviously, there are some disruptions, but post-monsoon, we expect all projects to run properly.
All right. Okay. Thank you. That's it from my side. All the best.
Thank you. The next question is from the line of Deepika Chadha from Cogent Invest. Please go ahead.
Hello, sir. I wanted to ask you one question. What sets you apart from your competitors in the heavy civil engineering sector, particularly in hydro, irrigation, and tunnel segments?
You're talking about the names of the competitor?
Yeah. And what sets you apart from?
Yeah. So see, generally when we bid, our competitors are like L&T, Afcons, Megha, so for hydro segment, Jaiprakash. So, and we go to irrigation or tunneling, then depending upon the type of work, there are various other players as well.
Okay. And how do you manage your relationship with government agencies and PSUs?
So we have cordial relationship with them because we have been working with them for, a long period. And hence, most of the directors of projects and everyone are similar ones who are working. We are working with them in other projects.
Okay. And what is the current competition scenario in bidding process of hydro and tunnel?
So that's what normally in hydro, around 5-6 bidders are there.
Okay.
Irrigation, depending upon state to state, the number of bidders may change.
Okay. And how do you intend to leverage your strong order book and customer base for future growth and profitability?
See, we are pretty confident that we have a good share in the hydro segment, and the clients also, because of our past executed projects, we have a good rapport with the clients. And it is all competitive bidding projects. So once we get the projects through competitive bidding, we don't see a challenge in execution.
What is the quantum of hydro projects going in India?
So quantum-wise, around 18,000 megawatt is currently under execution, out of which we are doing 8,200 megawatt. So around 45% of the current execution, which is under execution. And what is under pipeline is 21,000 megawatt is already approved to be starting construction. And another, if you add PSPs, that is another 11,500 megawatt. So there is enough scope of work coming up.
How much you can bid in that?
See, we will bid selectively, but in the past, if you see, we have been in the range of 25-30% share.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. One clarification, the Dibang project in JV that we have won it. So what is our role and what is the JV partner role in that project?
It is a 50-50 project, so the work will be split up. It will be executed by the JV and the revenues will be split up 50-50.
Okay. So in terms of segregation of work, like technical work and then financially support is
That we
providing.
both will, work out together what
It
we
will
do.
be executed under separate JV.
Okay. Okay. And I mean, you did mention like, there was a flood and then some bit of rework is being done. So does this have any impact on us in terms of like redoing the work and or probably it is covered under some sort of insurance, so that can clarify?
No, so that is covered under insurance for the clients. For us, whatever work we do, we'll get paid for the client.
Okay. So basically, I mean, in terms of, the client is getting it from insurance, but from us, no redo of work that is required to be done.
No, it is extra work, we would say, that we have to do it, and the client will bill it to the client and will be covered.
Right. Okay. And then you did mention around 21,000 megawatt of project, which probably will go for construction in hydro. So this is you're saying this will be an opportunity and tendering will be happening for these many megawatts?
Yeah, based on we evaluate each project separately and based on cost estimate and other parameters, execution parameters, technical parameters, and then we select for bidding. But yeah, there's many opportunities available in the sector for bidding. Okay.
So, but if I get a more granular thing, so is it like, these tenders are open as of now or they will be coming up in?
They will be coming up in near future.
Okay. And one last question. In terms of our order book, I think it is quite segregated. Directionally, can you qualify? Can you give some direction, like, margin-wise, which side of the order book get a higher margin, and then probably some trajectory, if you can just provide. If not, number-wise, maybe a qualitative aspect, if you can provide.
Hydro is generally, 100, 200 basis points higher, and the others are 100, 200 basis points less as compared to our average of 13 to 15%.
Okay. So it is basically hydro one side and rest are other side. Is that fair understanding? Okay. Sure. Yeah, that's all from my side. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Aman from Covered Investments. Please go ahead, sir.
Yes, ma'am. I was just, first of all, I congratulate you because it has been an immense journey traveling with you. Now, and the second thing, I was very curious about getting to know because we're positioning ourselves as a hydropower sector leader in India. When you quantify that 18,000 is there and we are doing 8,000, I just wanted to know your perspective and the facts. Like in the scale of renewable energy, hydro is only one part and there are others. How do you see hydro being placed in the scale of renewable energy in terms of their capex, the amount spent on the infrastructure and the return it gives on the infrastructure spend in the range, in the in the series of these renewable energy investments? Like if you can just categorize like hydro is on the top or solar is on the top or wind is on the top and delineating 3 or 4 other energy sources of renewable energy. If you can just give me a broad picture so that I can understand the future of India or not.
See, we can explain you whatever information we have. So there are 3 broad categories of renewable, which is solar, as you said, solar, wind and hydro. So hydro comes naturally to India because of the presence of various rivers and abundance of water availability sources in India. And if you see all large developed countries where water is available, more than 60% of the energy requirement comes from the hydropower. And because peaking power and all, whenever required, the peaking power requirement can only come from hydropower. Solar and wind are other sources where renewable can be done, but then solar will need large spaces of land, and wind can be done only in locations where the wind is suitable enough to have a wind power. So yes, these 3 are the broad basic categories because India is a vast country and all sort of terrains are available. But again, because of abundance of availability of rivers across India and mostly in the north region, we see hydro as a large contributor towards this renewable energy.
Okay. And going forward by 2030 in India's portfolio, how much percentage do you assume that hydro will be playing the role?
So, I mean, we see that there is no reason why India should also not move towards other developed countries where 60-65% of the energy is coming from the hydro segment.
Okay. Sure. I just wanted to know your picture because you can judge it. But what is the average cost of borrowing which is going on right now currently, which we have, because we have taken some loans and we have paid off some loans, and we have paid off long term and taken some current loans. So I just was curious, what is the average cost of borrowing which is currently we are handling with?
So it is around 11.5%.
Okay. And our plan to whether reducing it or gradually as the economy reduces its our cost also reducing?
So yes, see, it will be coupled with economy as well as our performance rating improving. So as and when the rating improves, this thing will go down. Plus, it should also depend upon how the overall MCLR and other benchmark rates are moving.
Okay. And sir, as the government is also facing some financial tightness, do you see whether the guarantees or any deposit money or the limits have reduced or have they come down, or how is the position there?
No, that
for bidding as well as new projects or the ongoing projects, any such sort status, or have you been repaid your deposits of some amount?
No, so see, there is no challenge from the government side. Whatever deposits, whatever retention and all are there, we are getting released on time. The requirement of performance guarantees have reduced from the past. Earlier it used to be between 5 to 10%. Now it is in the range of 3 to 5%. So requirement
3 to 5%.
come down. So yeah,
Okay. Yeah, you go ahead.
towards improvement and betterment towards the contractors.
And do you think that doesn't it invite more competition to the picture, or is it that we will be dominating as Madam said?
See, there will be competition. Obviously, always new people will try, keep coming in, but we have our legacy of work done, and with that legacy and experience, the bidding, whatever we do, and the cost efficiencies, what we can bring in, along with the confirmation or the confidence of the client that the projects will be completed by us on time, and there will be no issues with the project. So those things are always there.
Correct. So, on a quick note, we have recently seen that both REC and also PFC has been given decisions, and they have also given the power to not only route funds to power sector but also infrastructure as well. Are we seeing support from their side as well coming into our business, or are we approaching them for support, whether it be working capital or initial funding or a debt to equity or whatever type of funding we require?
So we have moved from, traditional banks also to institutions like IRIDA. Now we would see in future, like depending upon what projects we get, to move to REC, PSC, we'll see that.
Okay, because their average cost of lending is around 9 to 9.5%. So it can reduce our burden as well, and they have funds to give it to us. Okay, yes, sir. Sure. Thank you and congratulations on your results, and I hope that this sustains, and order books are little bit on the downside this time. But do you expect the trajectory to going as Madam or as the information degenerates as 20% CAGR going forward?
Yes. So this year, till elections, we are not sure about how much, big orders will come in, and there may be a little shift, but on a long-term perspective basis, we don't see a challenge in getting that 15-20% year-on-year increase.
Okay. And just a small thing, tunneling has been seen as the most vibrant sector in our business. What do you prospect, not only in the northern belt, but also I presume that the southern side or southern or the north, or western or the eastern belts also a significant demand of tunneling coming. Are we seeing orders or bids coming in these sides like Gujarat side or West Bengal, Odisha side, these sides also for tunneling sector?
Yes.
Okay, sure. Thank you.
Thank you, sir. We take the next question from the line of Chetan Dhruva, an individual investor. Please go ahead, sir.
Hi, thanks for the opportunity. So I had two questions. First one is regarding this revenue growth for the second half. First half, I think you've crossed the 20% range that you had mentioned. So do you expect to maintain this? Because the revenue will be coming from the orders you already won. So you expect to maintain this revenue growth rate in the second half?
Yeah, we expect to maintain. I mean, we generally it should be maybe between 15 to 20%.
Okay.
Should be in that.
Okay, sounds good. Second question was on this Vivad Se Vishwas, the arbitration piece. You had talked about around 4,000 crores of pending arbitration awards, right?
No, 4,000 is including under arbitrations, out of which around 1,200 is arbitration awards.
For which you already won.
Right.
Okay. So when you go for this scheme, what kind of haircut is typically taken? When is there a haircut at all? You get the whole amount.
Complex thing, but on a ballpark thing, we can say around 50%, we'll get.
50.
Yeah.
Yes.
I see. Okay.
Reductions in interest, your reductions in other things, so all combined, it's not more than 50%.
Okay, but the benefit you will see is you will accelerate the recovery of the money, right? Instead of 4 years,
Yeah,
you probably get it within
accelerated
3 years.
recovery of money and, saving on future litigation costs and all, that is the benefit you get.
Oh, I see. Okay. That's it from my side. Good luck for the future projects, sir. Thank you.
Thank you, sir. We take the next question from the line of Mr. Rajesh Sharma from 540 AM Finance. Please go ahead, sir. Mr. Rajesh, your line is in the talk mode, sir. Please go ahead with your question.
Am I audible now?
Yes, sir.
Okay. So first of all, many congratulations for very good quarterly results. My question is specific to the debt position of the company right now. We started with a 1,725 CR debt at the beginning of the financial year. Now we are sitting at almost 2,000 CR. First, I want to know the breakup of the debt at present we are carrying with respect to yearly interest, pure interest, and the advance from the client's interest that we are paying. That's one. And then we'll move on to the target of achieving 1,500 CR at the end of the year, and the target that we set at the beginning of the year of achieving around 25 to 30 CR quarterly savings, which have not accrued over the first 2 quarters. So can I just request the management to explain the journey that we'll have over the next 2 quarters to achieve these things?
So let me just give you a brief. So we had debt of around 1,750 crores in March and around 1,250-1,300 crores of client advances. So all combined, it was 3,050 crores approximately in March. Today, as we stand, we have debt of around 2,000 crores because of some shift of client advances to debt to save the interest cost. And we have advances of around 900 crores. So we stand today around 2,900 crores as compared to 3,050 as of March. So we have reduced by 150 crores in the last 6 months. That is one thing. And interest cost, if you see, that has come down. Last year, we were touching almost 100 crores per quarter. And this year, we are doing around 90 crores a quarter. So 10 crores per quarter saving is already come in this year as compared to the last year.
So, which is only 1/3 of the targeted figure, because last year also, if I remember correctly, we saved 500 CR in the last quarter itself. Rather, we repaid the debt. So if we intend to do the same thing this year as well, then this savings of around 70 CR approximately we'll be losing out. Not 70, 60. 50 to 60.
We had kept a target of reduction of debt by 200 crores this year. 150 we have already done combined in terms of the debt and the advances. And next 6 months balance we should be able to do.
Okay. So looking at the numbers, I have got still my doubts. but I would just draw your attention to this particular piece, where we are behind the targets. In revenue and rest of the things, margins we are holding on, that's excellent. But with respect to debt, the comfort level is a little bit on the lower side, the way we are progressing this year. So that's what is my request.
Absolute debt number is looking higher because of refinancing of one of the advanced 250 crores, which was at the higher interest rate cost. To save the interest cost, we refinance with the bank debt. That's why absolute debt number is looking higher, but overall, if you combine debt plus contractive advances, overall it has come down.
Yes, ma'am. So my concern is not the overall number has come down with respect to interest cost. My concern is what we targeted at the beginning of the year and where we are after H1. That is not matching, and we are only at 1/3 of the targeted figure. So if we achieve it, then we will add around 50 to 60 crore directly to the bottom line by the end of the year. So this is what is my submission to the management. I hope you appreciate and you would understand it.
Yeah, I think we both are on the same page, because 150 crores is already done, and another 100 crore if we do in this year further, so that should be enough for the reduction of the interest corresponding cost, which was our target at the beginning.
Right. Fair enough.
Yeah. Thank you.
I look forward to it, and yeah, for the next 2 quarters, I'm sure we'll be able to achieve it.
Thank you.
Thank you, sir. We take the next question from the line of Arushi Shah from Sushil Finance. Please go ahead.
Am I audible now?
Yeah.
Thank you for the follow-up question. Can I get a ballpark number of how much contract advances do we receive as a percentage of our order book or something? A ballpark number?
So it varies from project to project, but it's generally around 8-10% considering mobilization advances and machinery advances.
Okay. Also, one more thing I just wanted to know is there is something classified as held for sale because it's a listed presentation. Not
Sorry to interrupt you, Miss Arushi. We are losing your audio, ma'am.
Oh, now better now?
Yes, please go ahead.
Sorry. So, the assets held for sale, it appears in our presentation around 289 crores, but it's not visible in the balance sheet. So, what is that about? Could you just give that clarity?
Yeah. So, see, this year we had sold a stake in one of our subsidiaries, which is Michigan Engineers. So,
okay.
If you see that 289 crores, which is reflecting as asset held for sale, that is the reclassification of the assets of that subsidiary for the previous financial year. It is there in the balance sheet also, and the presentation also. It is just a reclassification for making it comparable with the subsidiaries that combine as held for sale.
Okay. Also, we were trying to encash some of our land parcels. How is that progressing? If you could shed some light there.
We are under discussion. Let's see if something works out in this financial year.
Okay. So nothing concrete on that side as of now?
No, nothing concrete as of now.
Okay. Thanks. So thank you for the follow-up. Thank you.
Thank you. We take the next follow-up question from the line of Prashant Sagar from Univate Corporate Research. Please go ahead.
Thanks for the follow-up question. I just want to ask you what is our company's role in Arun 3 hydro project? If you can just...
We are the civil contractors for that project for construction of the hydropower plant.
Hydropower, but only the civil contractor or the dam part also you Patel Engineering does, or is it some other?
No, that part is being done by the other party.
Other party. Oh. And what is the progress on that project actually?
Yeah, I think 1.5 years the project will be over.
So at this stage, we have completed what percentage of work from our side we have completed in that?
Around 70%.
70%. Yeah. Okay. Thanks a lot. That was it.
Thank you, sir. The next question is from the line of Ajay Kumar Agarwal from Gloucester Limited. Please go ahead, sir.
Good evening, sir. Am I audible?
Yes.
Sir, between our standalone and consolidated results, there is an item called exceptional item, which is around 92 crore in the previous quarter in the current financial year in the standalone, while it is only 6 crores in the consolidated accounts. And then at the bottom of the consolidated result, it is mentioned that it is due to further provisioning in an investment in a subsidiary company. So if it is an impairment provision, will this result into some gain? Because it's a profit that has been reflected in the consolidated number. And there's a huge gap between consolidated and standalone. If you can throw some light on that.
So that was in the previous quarter. That is because of the sale of one of our subsidiary stakes in one of our subsidiaries. So in standalone books, because that investment was at cost, so that gain is being reflected in the standalone books. However, when we go to console, because in console their reserves are already there, so that gain will not reflect in the P&L of the consolidated results. That is why, and it is a transaction of the previous quarter.
Yeah, that's right. It's for the previous quarter. And one last question, sir. Quarter 2, that is the current quarter, in the current financial year, as well as in the last financial year, is relatively much smaller in terms of bottom line in comparison to the other 3 quarters. So that is the seasonality that we are referring to the notes on accounts. So we can probably expect quarter 1 like, or maybe better than quarter 1 like quarters in next half year.
I mean, that has been the past trend.
Yeah. Okay. Got it, sir. Got it. Any expectation of any interim dividend going forward?
Not in the recent times.
Okay. That's it from my side, sir.
Thank you.
Thank you. The next follow-up question is from the line of Deepika Chadha from Cogent Investment. Please go ahead.
Thank you for the opportunity again. Sir, I had one question. What is the quantum of projects in irrigation segment? Also, how much we are planning to bid as we are adding this irrigation projects in our recent quarters?
See, we currently have around 20% of the order book from the irrigation segment, which is around 4,000 crores. The market is like around 1.3 lakh crore for JJM projects and around 90,000 crore for other irrigation projects which comes under Pradhan Mantri Krishi Yojana, plus whatever project state government comes up with their own budget. So the market is huge. We will obviously not bid for everything and will bid selectively.
Okay, thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you all for joining this call. If you have any further follow-up questions, you can send email to us or to Kirin Advisors, and we'll be happy to answer.
Thank you.
Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.